The Philippine market finally rebounded last week, but two stories stood out above the rest. Mynt's blockbuster IPO filing and the NCR's biggest wage hike in years. One could unlock billions in value for investors, while the other could reshape inflation, interest rates, and corporate earnings. What do these developments mean for your portfolio? Let's break it down. Hi everyone, welcome to another episode of Intelligent Investing. I'm April Tan. The local market finally bounced last week, with the PSEi rising by 1.9% to close at 6,188.03. More importantly, the critical 6,050 support level held. Market breadth was also positive, with gainers beating losers 114 to 95. But before we get too excited, investor participation was still quite cautious. Average daily value turnover remained thin at only 5.3 billion pesos, while foreign investors were still net sellers by 171 million pesos. So even if the market rebounded, the move was not yet supported by very strong trading activity. What helped sentiment last week? First, Middle East tensions eased. Early last week, U.S. President Trump said the U.S. and Iran had agreed to hold talks in Qatar after tensions escalated over the weekend. Because of this, oil prices stayed below $70 per barrel for most of the week. That's a positive for the Philippines because we are a net oil importer. Lower oil prices help reduce pressure on inflation, the peso, and interest rates. Second, expectations of an immediate Fed rate hike also went down. The U.S. non-farm payrolls report for June was much weaker than expected, with only 57,000 jobs added versus the consensus estimate of 113,000. A softer U.S. labor market reduces the urgency for the Fed to raise rates further. And if the Fed becomes less aggressive, that also reduces pressure on the BSP to tighten further. Now let's talk about the big stock market movers. Among the index names, Ayala Corporation, GLO, and PLDT were among the best performers last week. Ayala Corp rose 13.9%, GLO gained 4.7%, while PLDT was up 3.9%. The main driver was renewed interest in fintech valuations after Mynt, the operator of GCash, filed for a potential IPO in October. Mynt plans to raise 80.3 billion pesos through the sale of 8 billion shares at 10 peso per share. This implies an equity valuation of around $11 billion. The final offer size could even increase if the over-allotment option is exercised.
Reasonable is Mynt's $11 billion valuation. Is it justified, or is it the market getting ahead of itself?
I think the $11 billion valuation is justifiable because if we annualize Mynt's first quarter profit, so it earned around 5.6 billion pesos. So if we annualize that, that would amount to around 22 billion pesos. So if we use the $11 billion market capitalization or valuation of Mynt, that would imply a PE of around 30 times. But if we look at the other fintechs in the region, they're trading at more than 30 times PE. So in that respect, I think $11 billion is justifiable. And aside from that, I think what's important to note is that Mynt's profits are growing very fast. And that's expected to continue given how underpenetrated the industry is when it comes to the use of fintech. Yes, I know that a lot of people already have GCash. However, there are still a lot of avenues for growth for GCash, so that would allow profits to still grow faster, justifying the high level of the valuation. GLO and Ayala Corporation are the direct beneficiaries of this potential value unlocking. GLO has a 34% economic interest in Mynt, while Ayala Corporation has a 6.5% economic interest. And even though PLDT does not own shares in Mynt, a successful Mynt IPO could help the company because it may lift the valuation benchmark for Maya, its own fintech platform, which is also expected to list eventually. Despite last week's strong performance, both GLO and Ayala Corporation may still have room to run. Last week, COL Financial raised its fair value estimate on Globe by 12.6% to 2,510 per share. That is still more than 30% higher than Globe's market price. The upgrade was driven by COL's higher valuation for Mynt, from $6 billion previously to $10.4 billion. At this valuation, Mynt is trading at an implied 2026 estimated PE of 29.5 times. This is broadly in line with comparable fintech platforms such as Paytime, Mercado Libre, KakaoBank, Sea Limited, and Grab. It is also significantly below the around $11 billion maximum IPO valuation stated in Mynt's preliminary prospectus. Mynt's first quarter results support the upgrade. The company booked 5.6 billion pesos in profits, up 24% year-on-year. Growth was driven by credit tech, which accounted for 42% of revenues. Credit tech revenues grew 47.8% year-on-year, supported by a 27% expansion in its loan portfolio to 64.1 billion pesos and a 9.4% increase in active borrowers to 7.5 million. This more than offset the 1.5% decline in payment solution revenues, which was dragged by lower online gambling-related transactions, even though gross transaction value still grew 23.2% to 4.7 trillion pesos. COL also raised its fair value estimate on Ayala Corporation from 641 per share to 698 per share due to two factors: the higher valuation of Globe and Ayala Corp's direct exposure to Mynt. The higher valuation of Globe raised Ayala Corp's net asset value by 21 peso per share to 877 peso per share. But this only captures Ayala's indirect exposure to Mynt through its 30.6% stake in Globe. COL also assigned value to Ayala Corp's direct economic exposure to Mynt through its 50-50 joint venture with Mitsubishi Corporation. After the IPO, Ayala Corp is estimated to have a 6.3% direct stake in Mynt. Based on a $10.4 billion valuation, this adds another 56 pesos per share to Ayala Corporation's net asset value, raising it to 933 pesos per share. After applying a 25% holding company discount, COL's fair value estimate for Ayala Corporation rises to 698 peso per share, which is still more than 40% above Ayala Corp's market price.
So after last week's rally, do AC and Globe still have meaningful upside, or has the market already priced in most of the Mynt IPO story?
I think there is still reasonable upside. I think before the uncertainty was, we kind of knew that the Mynt IPO would be good for Globe and Ayala Corp, but we couldn't put a figure to it. But last week, our analyst at COL Financial gave us a number already on the fair value estimate for Globe and Ayala Corp after factoring a valuation of Mynt. So I think there are some things that are worth highlighting. For example, they valued Mynt at $10.4 billion. So $10.4 billion is actually a discount to the IPO price, or the maximum IPO price of around $11 billion on a valuation perspective. But even then, the fair value estimate for Globe after factoring that in is around 2,510 pesos. So that's still a good upside from here. For Ayala Corporation, it has an indirect stake in Mynt or GCash through Globe because it owns 30% of Globe. So that particular valuation goes up. Plus, of course, it has a direct stake through the 50-50 joint venture with Mitsubishi. So that's another 6.5%, 6.3% post-IPO. So because of that, the fair value estimate of Ayala Corporation goes up to 698 pesos. So that's around 40% higher than Ayala Corp share price, meaning there's still upside to both stocks. Outside the index, Megawide rallied 5.1%. The company disclosed last Friday that it completed the monetization of its 9% stake in listed renewable energy company Citicorp Renewable Energy Corp for 4.5 billion pesos. The market reacted favorably because part of the proceeds will be used to further reduce liabilities by another 2 billion pesos, which it had already reduced by around 6 billion pesos recently. Management estimates that this could lower annualized interest expenses by 250 million pesos to 300 million pesos. This is quite significant considering that Megawide's profits were just 669 million pesos last year. Sentiment was also helped by improving earnings momentum, with first quarter net income rising 26% year-on-year to 265 million pesos, and by Megawide's 48.7 billion pesos construction order book, which provides revenue visibility from socialized housing and transport infrastructure projects. CNPF also performed well, rising 2.7%. The stock was supported by news that operations at its General Santos facilities in Mindanao are nearing normal levels, more than 3 weeks after a magnitude 7.8 earthquake disrupted production. Aside from the recovery of its southern facilities, CNPF and other consumer companies could also benefit from lower oil prices. Lower oil prices should help ease inflationary pressure, reduce costs, and support sales and margins. Meralco, meanwhile, was hardly changed at 575 pesos despite some positive updates. Sales volume rose by 4% in May and by 2 to 3% in June. For the second quarter, volume growth recovered to 0.6% after falling by 1.8% in the first quarter. The company also said it expects net income this year to be higher than last year, supported by growth in both its distribution and power generation businesses. On the other hand, SCC and its parent DMC were among the major decliners, falling 7.9% and 2.6% respectively. The weakness was likely driven by the 10.2% drop in coal prices last week, which weighed on sentiment towards coal-related earnings. Now, looking ahead, inflation will be the key focus this week. On Tuesday, the PSEi will release June inflation data. Consensus expects inflation to reach 6.6%, while the BSP estimates a range of 6 to 7%. The BSP said inflation was likely driven by higher electricity rates and vegetable prices, partly offset by lower oil and other food prices.
What does it mean if inflation comes in higher than expected?
Well, I think the main issue is that it could cause the BSP to raise interest rates, which is negative. I think a higher than expected inflation could be a sign that there are, what they call second round effects, that high inflation is snowballing and causing prices to actually go up even faster. So if that happens, then the BSP, given its mandate to control price pressures, will be forced to raise interest rates to keep prices low. But unfortunately, higher interest rates are bad for economic growth, and they're also bad for the stock market. Investors will also closely watch how the BSP reacts to the recently approved NCR wage hike, as last week, the Regional Tripartite Wages and Productivity Board, NCR, approved an 85 peso increase in the daily minimum wage, the largest adjustment so far in the region. The wage hike will be implemented in 2 tranches, 60 pesos starting July 19 and another 25 pesos in January 2027. This will raise the minimum wage for non-agricultural workers by 12.3% from 695 pesos to 780 pesos. For agricultural workers and employees of retail, services, and small manufacturing establishments under the lower wage tier, the rate will rise by 12.9% from 658 pesos to 743 pesos. The wage hike should support household spending, but the BSP's perspective, the question is whether it will add to inflationary pressure or trigger similar wage hikes in other regions. This could complicate the central bank's policy outlook, especially if June inflation comes in near the upper end of the BSP's 6% to 7% estimate. So investors will be listening closely to the BSP's comments on second-round effects, wage spillovers, and how it balances growth and inflation risks. Among consumer companies, the impact of the wage hike is expected to be mixed. in the near term, the direct impact should still be manageable for most listed consumer companies. However, investors should monitor whether the NCR wage hike spills over to other regions or to non-minimum wage workers. If companies need to adjust broader wages to avoid wage distortions, that could put pressure on margins. With the consumer sector, restaurants and retailers are expected to be the most exposed if wage pressures broaden beyond the NCR. These include Jollibee, Pizza, SSI, RHI, Wilcon, and Pure Gold, given their labor-intensive cost structures and reliance on store count expansion. But taking a longer view, wage hikes should also support consumer demand by improving the purchasing power of Filipino households. So while the wage increase may create temporary margin pressure for labor-intensive companies, part of the cost impact could eventually be cushioned by stronger consumption.
So who are the biggest winners and losers from this wage hike? Which sectors should investors be paying close attention to?
Okay, so I think over the longer term, in general, I think all companies should benefit because, higher wages would improve the spending power of consumers. I think in the short term, there could be companies that are very labor intensive and they will be the main losers from the wage hikes, especially those that have very labor intensive operations that require low cost workers. Okay, and this may include those that are in retailing for the consumer sector and restaurants. Okay, but at least it's more of a short-term impact because over time, hopefully, this will not lead to second-round effects, and this would be the end of it. And if that happens, then of course consumers would have greater spending power, which will enable them to buy more. In the US, investors will monitor the ISM prices paid component for signs that services inflation is cooling. They will also watch the ISM Services Employment Index for further signs of a softer labor market after the weak June payrolls report. Cooling inflation would help ease concerns over an aggressive US rate hiking cycle. Together with easing geopolitical tensions, this could help local interest rates move lower and support peso strength, both of which would be favorable for the Philippine market. For the PSEi, after the 6,050 support level held, the next resistance levels to watch are 6,380 and 6,500. So to summarize, the market bounced last week, but trading activity remained thin. The key positives were easing geopolitical tensions, lower oil prices, and reduced Fed rate hike expectations. But investors will now shift their attention to inflation, the BSP's reaction to the wage hike, and whether the PSEi can break above its next resistance levels. That's it for today's market wrap. If you found this helpful, please like this video, subscribe to the channel so you're first to know what's moving the market. Once again, I'm April Tan. Remember to stay sharp, stay selective, and as always, invest intelligently.